everyone, my name is Natalia Itu and I'm a CPA with Colorado Business CPA. Well, now it's December 2015 and I would like to give you a little bit more information about tax planning. So here it is. So the very first thing I would like to talk about is a late S corporation election. So if you operate your business as a single member LLC, limited liability company with the state, perhaps the state of Colorado, and your income is more than $30,000 to $40,000, that probably would be a good idea to convert your LLC into an S corporation by doing a late S corporation election. So what that means, you file a Form 2553, and also IRS perhaps will allow you to have a late S corporation election by using a revenue ruling 2013-30. However, keep in mind you have to have a reasonable cause. So now the question is, why do you want to be an S corporation? Well, first of all, the good news is if you made more than $30,000, net income from S corporation is not subject to self-employment tax. Well, self-employment tax 15.3%. Therefore, you can save, I would say, about $2,500. So why do I say $2,500? Well, because you still need to have a reasonable salary, which we will discuss shortly, and subject that reasonable salary to a self-employment tax. And therefore, you will still have to pay taxes. Also, you have to pay accountant, to your accountant, or if you don't have one, please feel free to call us. We'll help you to do a late S corporation election, as well as to do your Form 1120 as for S corporation. So that's one reason why do you want to be S corporation. The second reason I usually suggest to my clients, when they operate their business as a Schedule C, and if they have significant losses on their Schedule C, it's a very high risk to get audited by the IRS. And when I say significant losses, I would say, over $15,000, $20,000 in losses. Like, let's say year one, you had $15,000, $20,000 in losses. Year two, you had 15, 20, or even maybe more in losses on Schedule C. That's not a good idea because you do not want to get audited. I would assume so. So, therefore, if you are the only owner of your business, converting your LLC into an S corporation also can be a good idea. If you have a business partners, perhaps your spouse is involved, you can also create a Form 1065. It's a partnership. But my suggestion is to leave Schedule C because of the high audit risk. In fact, if you operate your business as an LLC on Schedule C, you have 10 times more risk to get audited versus if you operate your business as an S corporation or partnership. So the next question, the next item I would like to address is a payroll compliance. Do you remember I said when you have a late S corporation election or when you operate your business as an S corporation, you need to have a payroll. You have to have a payroll. That's one of the IRS rules. And therefore, when I talk about payroll, I'm talking about the real payroll, not the shareholder distributions like when you write yourself a check and you take money. That's called like a dividends or shareholder distributions. I am talking about the filing forms 941, filing forms 940, which is federal unemployment, having a W-2, having a Colorado unemployment form, state. Colorado state, as well as local taxes. So that's the official payroll, and that's where you still, remember, that's where you still need to pay payroll taxes, but you pay taxes only on your reasonable salary. So that's what, that's what I'm talking about, the payroll. So another issue I would like to address is the shareholders' health insurance. When you have an S corporation and you have medical insurance, your company can reimburse you for your insurance, and either your company can reimburse it to you or company pays directly, right, for your health insurance premiums. Well, as a 2% or more shareholder of your S corporation, what you need to do, you need to report those insurance premiums paid on your W-2, box 1, box 14, and for the state. What I mean is the premiums, they will add to your salary for that amount. However, the medical insurance premiums will not be taxed for Medicare Social Security taxes. Therefore, it's really, really important. That's one of the IRS compliance where you do need to have the shareholders' health insurance added to your wages, but not subject to FICA tax. So if you're confused, if you don't have accountant, again, feel free to call us, Colorado Business CPA. Our website is coloradobusinesscpa.com, and we can help you with that. So another thing what you need to think about is retirement accounts. When you have a payroll, when you have official W-2 form, you can also make the contributions to your retirement accounts, right? It's not too late still to set up a W-2. If you have a W-2, it's still not too late to set up your SEP IRA. If you have no employees and you are in the S corporation, you can set up a SEP IRA, which is simple employer plan, and the maximum you can contribute is 25% of your W-2 wages, right? So the deadline to contribute is the earlier of March 15th, or when you file your taxes, or you can wait all the way until September 15th next year to contribute into a SEP. However, keep in mind, you cannot file your tax returns until you contribute money. If you also have no employees and you make significant amount of money, you can contribute into a solo 401k. So what's solo 401k? Solo 401k is basically if you're under 50 years old, you can put $18,000 plus your company can do 25% match. So for example, for the salary of $60,000, you can contribute up to $33,000 into a solo 401k. If you're in a 30% tax bracket, well, you do the math. That's about $9,000 in tax savings. It's a very good idea. If you have employees, it's still not too late to establish a 401k. If you don't have a financial advisor, let me know. We will find one for you. If you have a financial advisor, please talk to that person and they will help you. You can also do a traditional IRA. Remember traditional IRA, $5,500. And you can also do a Roth IRA. However, keep in mind that Roth IRA will have no effect on your tax liability, but it's a really good tax strategy. It's not a good tax strategy, it's a good retirement planning strategy, right? So another thing that I would like to discuss is Section 179 of the IRS code. I'm sure you have heard about Section 179. So basically what that means is when you purchase a fixed assets like a table, equipment, even a truck, if it's more than 6,000 pounds, what you can do, you can deduct up to $25,000 by using a Section 179 this year. So if you need to make investments in your business, you need to purchase equipment, you need to purchase, again, a truck for your construction company, you can write off up to $25,000. So now it's the time, it's December, go get your computers, go get your monitors, furniture, whatever you need for your business, because you can write off dollar for dollar up to $25,000. So what else I would like to talk about is prepaid expenses, right? If you still have some money left on your credit card, you can prepay some expenses. You can purchase supplies, you can prepay rent for a couple months if you would like to. You can prepay for professional fees. Whatever you need to do, take care of your expenses. However, also keep in mind, if you know that next year you will make more money, well, then maybe prepaying for expenses is not a good idea. But, just again, remember, if you don't have cash right now, you can still buy whatever you need to buy for your business and charge on your credit card, and it will be deducted when you charge your credit card, let's say in 2015, right? So also, a little bit, off the subject, but the health savings plan, if you have a high deductible medical plan, like for example, you have the shareholder health insurance, and if you have a high deductible medical plan, meaning, if you have to pay more than $1,300 out of your pocket, it is a very good idea to establish health savings account. And then you can contribute, if you have a single person, like, one person plan, you can contribute up to $3,300 $150, and if it's a family plan, you can contribute $6,650. You want to make sure you opened your health savings account by December 31st, 2015. And then you can still make contributions to your health savings account by April 15, 2016. But you want to make sure you do have a high deductible medical plan, and as long as you have it in 2015, great. You can also change your health insurance plans, like from one high deductible plan to another, but you will keep one health savings account. So, and another thing I would like to talk about is a business mileage. Remember, always keep track of your business mileage. If you have an office at home, keep track of your business mileage whenever you leave the house. For business purposes, that's all business expenses. So anyways, I'm looking forward to meet you, to see you in the new other videos, and where we will talk about a Schedule C, when people operate their businesses in LLC, and then report their activities on the Schedule C. So before that, thank you very much for watching the video. Again, if you have any questions, please call us. It's 1-800-5040-CPA, 1-800-5040-CPA, or our website is www.coloradobusinesscpa.com. Thank you so much, and have a nice day.